plant impact saw its shares wilt to an all-time low this week after the crop enhancement group revealed it had put itself up for a quick sale. The company said it had been left up the creek without a paddle after German pharma giant Bayer broke a pledge on purchases of its flagship soybean product, Veritas. Back in July, Bayer's CropScience Brazil subsidiary agreed to a reduced purchasing plan for Veritas for 2017-18 after weak farmer demand led to an inventory buildup. Those issues were supposed to be temporary, but that doesn't look to be the case, with Bayer now saying it won't even be able to meet its lessened commitments. Without those sales, plant impact will be left with a sizable cash hole, and said it would need to raise around £7 million before April in order to keep the lights on. As a result, the firm has now put itself up for sale with an accelerated timetable in an attempt to complete a deal early next year. Less drastic options are also on the table, including a sale of major assets or some sort of refinancing deal. Investors still weren't keen though, with the stock shedding 69% of its value to 6.7p. Another small cap licking its wounds this week was Forbidden Technologies following a strategy update from its new boss, which went down like a lead balloon. McDonough said a high-profile proof-of-concept trial with a major UK broadcaster, mentioned in a stock market release back in April this year, had finished without the customer signing on the dotted line. The former BBC Worldwide man, who has opted to replace most of the company's sales and marketing teams, claimed these were exciting times at Forbidden Technologies as he unveiled plans to turn the company's fortunes around. With the shares having halved in the last year, it is the sort of excitement long-suffering shareholders could do without. There was better news for US-based iodine producer Iofina, which jumped by a quarter to 16.5p on the back of a solid production update yesterday. The company's four operating ESR plants continue to deliver encouraging results, with second-half production on track to exceed 265 metric tons, Montana, comfortably ahead of the 225 to 250 Montana it had initially expected. Barring any sudden major issues, Iofina reckons full-year iodine production should total more than 500 Montana, which compares well with last year's figure of 474.2 Montana. Assuming all goes to plan, the company will have smashed last year's total despite having one fewer plant in operation. Iofina is in the process of bringing on a new plant, which continues to make progress well within expected time frames and budget. On the whole, though, the junior market looks like it might have finished for Christmas a week early, with the AIM share losing 2.3 points, or 0.2%, to 1,014.4 across the week. That was nowhere near good enough to register a win over the blue chips, though, as the FTSE 100 gained 55.4 points, or 0.8%, to reach 7,438.4 come this afternoon. Weighing heavily on the junior market was specialist information management solutions provider iDocs, which saw 40% wiped from its market value this week. Well, on Wednesday iDocs was forced to backtrack on that guidance, claiming that a small number of revenue items were included in November's update that probably shouldn't have been. The end result is that underlying earnings for the 12 months to the end of October are likely to be nearer to £20 million, which represents an almost 10% fall compared to last year, £21.5 million. iDocs blamed the sudden absence of its chief executive Andrew Riley, though illness is one of the reasons for the miscalculation, but shareholders weren't in a forgiving mood. It wasn't all doom and gloom, though. Software Quality Systems, SQS, had the top riser medal round its neck today after it said yes to a lucrative takeover offer. The firm, which, funnily enough, supplies software quality services, saw its shares surge by 55% as German outfit Welch & C884 lodged an 825p a share cash offer, is valuing SQS at just over £281 million. SQS shares closed yesterday at 527.50p, so the offer represents an impressive 57% premium,